Hello and welcome to the look at the week ahead. Today I want to focus mainly on Brexit, and as it's April the 1st, there's also a series of alternative votes this evening, which I'll talk about later on. Firstly, we got a report this morning from Goldman Sachs. It said Brexit has already cost the UK economy nearly 2.5% of GDP. And it's important to note this is purely based on uncertainty. There's nothing that's actually happened yet. And last week on Friday, we once more saw Theresa May's deal rejected, albeit with a twist. And now MPs are hopeful that these series of alternative votes, where we had the first round last week, may actually yield a breakthrough. So last week there was alternative votes on 8 other scenarios which the government could pursue with Brexit, and none of these gained a majority, but some of them, particularly around a customs union, gained quite high levels of support, and it's expected that 2, 3, maybe 4 of these will be selected by the Speaker this evening to go through for a second round of voting. UK 100 has made a bright start today. You can see it's extended the strong finish that we got to the end of last week. It's also received another boost after some positive data out of China over the weekend, with their manufacturing PMIs beating target. The UK 100 has a fairly large weighting of mining stocks, and these are obviously particularly sensitive to the Chinese economy. Now, looking at the chart, you can see we're back up near the highest level in 5 months, around 7,370, and also back above this 200 SMA after we got a strong drop just a couple of weeks ago. This 7,370 is potential resistance, but if we do go above there, then you could look back to the September 2018 highs, which come in around 7,560 as the next area of swing interest. If we do drop down below 7,250, then this low here around 7,160 is possible support. But if we do drop below that and also back below that 200 SMA, then we could see a pullback of the year-to-date rally. Turning our attention to the pound US dollar, you can see we've also seen a strong start to the week here. The market's back up near the 131 handle, and this also received a boost for some data. We got UK manufacturing PMI at its highest level in the year, although a large part of this can be explained by stockpiling due to firms on Brexit concerns. So this isn't actually as positive as it looks, and really the main driving force for this market, particularly from the pound side, remains Brexit developments. I think this region here from 129.60 to 130 could be potentially crucial, and you can see it has provided support on a couple of attempts to break lower in recent weeks. On the upside, you can see a rising trend line going back to the back end of last year, was broken below last week, and if we do push up to around this area now, which maybe comes in, let's say, at 130, 130, that could offer some potential resistance. Also, from the US dollar side of this pair, keep in mind that there's non-farm payrolls this Friday at 1:30, and what we get there from the US jobs side could have a big impact on the buck. Turning our attention to gold. Gold had some big moves back in 2016 on the Brexit referendum, but we've not seen too much sensitivity in the precious metal to the latest Brexit developments. But if the chances of a no-deal Brexit do rise significantly, then we could see a push higher once more in this market. You can see here from a technical point of view, there's a possible head and shoulders. We've got the first shoulder here, second shoulder there, and a messy sort of head. But what's important to look for, as always in these setups, is the neckline. You could take the neckline as a rising trend line here, which would come in around 1287, 1288. That could offer potential support. However, some people may look at this alternatively and say 1277 from these lows that we had back in January is the area you want to look to for possible support. On the upside, 1234 could offer resistance. So if we do see any talk of no Brexit gathering momentum this week, then no deal Brexit, I beg your pardon, gathering momentum this week, then we could see a push higher in gold, and also keep an eye out for Friday's non-farm payrolls release.